Ladies and gentlemen, I would like to welcome all of you to this occasion. I am Yasmin Andela Bilioma, Senior Public Relations Manager with APO Group, and I will be your host today. It is my pleasure to moderate this session. Control Risk and NKC African Economics are hosting this online press event to share with you expert views on Africa's post-pandemic recovery and to launch the fifth edition of the Africa Risk Reward Index. I hope by the end of this session, you will have a better grasp of the longer-term impact of COVID-19 on the continent, but will be as excited as we are about the 2020 edition of the Africa Risk Rewards Index, which is launching today. And we hope that you will share widely with your networks. I would like now to introduce you if you like to listen to the conference in French, kindly click on the globe icon at the bottom of the screen. Et si vous aimeriez écouter la conférence en français, merci de cliquer sur l'icône en forme de globe située en bas de l'écran. I would like now to take this opportunity to introduce you to the panel. We will be joined by Vincent Roger, Associate Director at Control Risk Head Office in London, where he leads the risk management and business team across West Africa. We'll also be joined by Patricia Rodriguez, analyst at Control Risk Nairobi office, where she leads the political, operational, and risk analysis across the entire Eastern African continent. And we will also dedicate some time to Bukola Bolarinwa, associate at Control Risk Nairobi office, where she manages all aspects related to political, security, operational, and regulatory within the West Africa and Gulfen region. And finally, we'll have the pleasure to meet Jack Nell. He's the head of macro at NKC African Economics, where he manages NKC African Economic subscription services and is also the lead analyst for South Africa. The program for this exceptional press conference is as follows. Our speakers will share a presentation for almost 30 minutes, followed by a Q&A session. If you have any questions, please don't forget to mention your name, your publication, and please use our dedicated Q&A session, and we will be glad to answer them. I would like now to introduce you to Vincent Roger. Vincent, welcome and thank you. Can you please tell us more about this 2020 edition of the Africa Risk Reward Index and the longer-term impact of COVID-19 on the continent?
Thank you, Yasmina, and good morning, everybody. It's great to have many of you on the line today for the presentation of our latest edition of the Africa Risk and Reward Index. It's our fifth edition of this index, which we launched in 2017, and a rather peculiar one happening in the context against the backdrop of the COVID-19 pandemic. We first launched this index in 2017. And the concept that we intended it for this index was a way to bring together two conversations that were occurring largely side by side. On one side, a conversation about risk that we're all too familiar with in our industry, talking about the challenges, the difficulties, the threats of investing in different countries. Another one, which has gained momentum at the same time, was around excitement, opportunities on the African continent, talk of a burgeoning middle class, talk of rising opportunities in different sectors. This index, in our view, was a way to bring the two sides together and to consider how risk and opportunity come together in different jurisdictions. It was also a way to bring attention to lesser known economies. South Africa, Nigeria, Egypt are justifiably on everyone's radar when looking at investment across Africa, but we also wanted, through that index, to talk about other more frontier markets in East, West, Southern Africa that weren't perhaps gaining as much attention, and also for them, look at the risk and reward balance. So if we could move to the next slide to maybe start talking about the methodology for this index. With this index, country risk analysts from Control Risks and economic analysts from NKC come together to rate 26 countries across 11 indicators. And those indicators range from political stability, attitudes toward business, security, so a variety of political risk indicators, to economic risk scores, such as exchange rate and credit risk, and etc. Each of these variable is given a rating and a weight given the significance it has on the country context, and that helps give us a risk score. We then put that in contrast with the reward score, which is more focused on the medium-term economic forecast, and that also combines a set of economic indicators that together are aimed at assessing the dynamism of the economy, the momentum that then will generate investment opportunities for different types of investors. So that's how the index comes together for the 26 countries that we are rating this year. If we can move to the next slide and have a look at the overall results, I think you'll find it as no surprise in a context such as COVID to see that most scores are in decline. After several years, in fact, most of our ratings in the previous indexes were showing consistent improvements across the board. Well, to this year, the trend has gone in reverse, and we're generally seeing scores drop across the board. This is particularly true for our reward scores, which are really falling across the board, and that reflects the economic downturn that we're seeing as a result of the pandemic. For the first time since 1994, the continent is expected as a whole to go into recession, and inevitably that results in diminishing economic opportunities and reward scores as a result. The impact on risk is a little bit more varied. Not all countries are vulnerable in the same way to the pass-through from economic risk to political risk. But we do see some contrast among countries in the region. Ethiopia has moved and has seen its risk score deteriorate, particularly, and that's a result of not only the COVID pandemic, but also political volatility with elections postponed and a resurgence in regional tensions. Others have seen their risk score more or less stable, and others, for circumstantial reasons, have actually seen their risk scores improve. And that's, for example, the case for Algeria, which has returned to some form of stability after the protest and the turbulence of last year that led to the president's resignation. Moving on to the next slide. We've heard a lot in the last 6 months about the impact of COVID in Africa. And fortunately, some of the doomsday scenarios that were floated at the start of the pandemic have largely failed to materialize. African countries, to their credit, were reacted quite quickly and fairly decisively in the beginning of the outbreak, with the benefits of hindsight, of seeing the experience of Europe and Asia. Most of them were quick to close their borders and introduce some form of travel restrictions. And while they were not able to sustain this in the long run for various economic reasons, that probably played a big part in averting or containing the initial spread of the pandemic to many of the countries. Since then, most of the restrictions have been lifted. They were simply not sustainable from an economic perspective. Testing has been largely subpar or has fallen behind in comparison to other continents. But at the same time, the case numbers are broadly in control. And while there is still uncertainty around the data and case numbers, it doesn't seem to be that we are missing a hidden epidemic or a silent epidemic, judging by the different observations on the ground. So the health impact has been managed decently well, considering also the experience of many of those countries dealing with pandemics and outbreaks in earlier times. On the other hand, it's very clear that the next few years and possibly the next decade will be dominated by the topic of recovery from COVID. And against the backdrop of severe economic impact and diminishing scores for reward, we wanted with this report to also take a step back and look at what that recovery will look like, what shape will it take, how long will it take, but also to what extent will it be transformative, what new opportunities may arise from the recovery from COVID-19. And so the core of our argument for the first article in the report that we're releasing today is that we are looking at a slow and uneven recovery. The pandemic has clearly shown still the dependency of African countries on foreign capital inflows, but also the lack of fiscal flexibility and buffers to deal and mitigate the economic fallout. I think, Jacques, that's something that you will touch on a little bit more in a second, but there are only a handful of countries that have the ability to engage in stimulus spending on a meaningful scale. And so companies, the private sector in general, is going to be left largely unsupported in having to recover from the pandemic. In some countries, we're also seeing international investors coming under more pressure by cash-strapped governments that are desperate to make more revenue. So on one side of the equation, the recovery is going to take a while. On the other hand, we do think that this will also be a transformative phase for African countries on many levels. The dependency on foreign capital has been made very evident and has been giving an impetus for governments to work on developing their own local capital markets, try to invest more from local capital and develop financial infrastructure to reduce the level of dependency on external flows. We are seeing a trend towards, or at least a greater focus towards food self-sufficiency as well. The pandemic has made clear that Africa was still largely too much reliant on food imported from abroad, and at times of border closures and travel restrictions, that's prompting a lot of governments to rethink their approach to food production at home and giving a lot more energy to those programs. For commodity exporters, the pressure is even more intense than before to seek diversification and find new sources of revenue. Oil exporters are on their third economic shock in a decade. And so for them, that is really becoming a matter of urgency. And then finally, we're also reasonably optimistic that this, or some of the lessons learned from COVID, or some of the innovation brought from COVID, could also spur a trend towards greater formalization of the economy. And that's largely the result of digital innovation, technology progress that we're seeing across the board, and that again will be given a boost by COVID. And this is the reason why we've made this topic also a key part of our Africa Risk and Reward Index this year. And on that note, I'll hand over to my colleague Bukola, who will actually talk to you a little bit more about what we mean by this digital growth and the opportunities that that creates. Thank you very much.
Thank you, Vincent. I hope everyone can hear and see me okay. My name is Bukola Bolarinwa. I am the West Africa analyst based in Controllers London office, and I'm going to be talking a little bit about the technology sector on the continent and what kind of trends we've seen and how this has been shaped and affected by COVID. So in the past few years, we've seen a surge of excitement in African tech. And when we say African tech, we're talking everything from agriculture space, education, fintech, e-commerce, renewables, logistics, and health tech. So it's quite a broad ranging sector. And it's been the fastest growing sector in the continent, and it's been driven by investments in infrastructure, from subsea cables to local hosting solutions, which have made internet access faster, cheaper, and easier. Indeed, in 2019, equity funding in the sector reached a record $2 billion, and that's a significant growth from the year before. So in terms of investments on the continent, it's really the sector that has seen massive growth. If you look at this graph, you can see the countries that have had the most interest. Nigeria across a range of sectors, but mostly in the fintech space. In Kenya, we've seen significant investments, especially around agri-tech. South Africa as well, fintech space has grown significantly. Egypt, Ghana, Uganda, and Mauritius If you look on the right, you'll see some countries such as smaller countries, such as Zimbabwe, that have also seen a significant interest. So really across the continent, we're seeing that level of interest in taking solutions digitally. However, tech in Africa still faces a different set of challenges than other parts of the country. So for example, in April 2019, after the excitement of Jumia, which was a company that started in Nigeria and was doing e-commerce and trying to be, they call themselves the Amazon of Africa. They became Africa's first tech unicorn, which means their valuation was over $1 billion. However, in April, their share price crashed significantly. And the lesson for Jumia and other operators in the digital space is that despite the excitement of tech sector, you can't bypass real life operational challenges on the continent. So there's significant issues such as inadequate transportation, infrastructure challenges, regulatory uncertainty, bureaucracy, high data costs, and low smartphone penetration. Those will continue to remain significant barriers for tech companies. The most successful startups on the continent are those that have recognized that tech is not driven by the Silicon Valley creed of disruption, but actually by need. So if you look, for example, at Africa's world-leading mobile money platforms, for example, they've been successful because they've been able to address an existing problem of lack of financial inclusion. And they've come up with very simple solutions using very simple smartphones that have really been able to solve a pressing problem. So with COVID-19 coming in this year, it's highlighted plenty of problems for tech to solve, things like contact tracing apps that can give health advice and self-assessment tools have been developed, and they've been rolled out on platforms such as WhatsApp, which work on much simpler phones in countries such as South Africa and Nigeria. We've also seen the African Union use tech to order PPE, which has allowed the countries to be able to order PPE using a simple supply chain platform. And things like that are very promising because they've shown that the pandemic can create focused solutions that answer much long-term problems. If you look at other countries in the lockdown, other countries, sorry, that have gone into lockdown, they've had a marked increase in data usage, especially as people are having to work from home and kids are having to use educational tools using the internet. And we don't think that this trend is likely to be reversed, even as people go back to sort of work and going back to regular schools. The pandemic has also created new long-term challenges in which digital solutions can play. So COVID-19 has seen a dramatic expansion of welfare provisions across the continent, from tax relief to cash transfers. And this is likely to prompt millions of people, especially in the informal sector, to try and formalize. What our article does is that it points to questions that need careful consideration when investing or lending in companies in the digital space. So we suggest that the central question about a company's commercial potential in this space is, does it fulfill a clear consumer need or address an important logistical challenge? And if the answer is yes, there's lots of opportunities within the sector. And we expect that interest in tech-enabled ventures in agriculture, food, education, health, and retail will continue to grow in Africa in the coming months. So I'm going to pass on to my colleague, Patricia, who's going to speak a little bit about this. Thank you.
Thank you, Bukola. My name is Patricia Rodriguez, and I am based in Nairobi, where I work on control risks for control risk clients looking at the entire East Africa region. So what I'm going to do here is slightly shift the conversation away from the focus on COVID a little bit to look at something that's perhaps been overlooked when talking about Africa, and that's influence operations on the continent. Where we have seen it covered, or where we have seen Africa mentioned, this has tended to be quite simplistic in the broader narratives. So what we're trying to do with our article this year is to highlight some of the nuances that exist on the continent when it comes to influence operations. And we've broken it down into the three main components. One is around the actors, the second is around tactics, and last, and I suppose this will be of most interest to some of our clients, is what the risks and challenges there are for businesses. So just briefly on those three elements, when we're talking about actors in Africa, oftentimes we see it's mostly external actors, or we're made to believe that it's external actors that are looking to influence public opinion or even election outcomes in Africa. While this is definitely true, we have seen reports in the past few years about external actors ranging from Russia, ranging from actors in the Middle East, trying to either influence public opinion in African countries in a certain way, or as I mentioned, influence the outcome of elections in a certain way. This fails to perhaps take into account some other actors that do exist on the continent. So first of all, we have to think, yes, there are external actors, but second of all, there are domestic actors that are increasingly looking to undertake influence operations on the continent, with the aim of persuading the public opinion in favor of one group of actors over another. So this can usually, or has been seen to take place during political transitions. So that could be through protest movements, that could be through campaigns on social media platforms that are essentially aimed to either get people to vote in one way or another. Now, when we talk about actors, we also have to think about criminal actors. So what we've seen is that we can have, genuine political movements or periods of political transition, or even simply campaigns, which criminal actors can then piggyback off of to either get people's personal information or influence opinion against even companies, for example. So it's not simply that narrative of external actors operating to influence domestic audiences in Africa. We also have to consider that domestic actors within African countries, be they political actors on the incumbent side or on the opposition, and finally criminal actors, all playing for influence on the African continent. Now, if we move slightly on to tactics, then we have another element which I think has been underexplored, or which we think has been underexplored when talking about Africa. Yes, there is a growing population of people using social media and using the internet more broadly. But we have to remember that most of the African continent, most of the population here does not have access to internet and are not active social media users. So this works in one way to limit the extent of some of the wider information operations networks on the continent. And we're finding that actors are having to be a little bit more, I suppose, innovative in how they are approaching the issue. So if we look at examples in our article where we saw external actors trying to influence the outcomes of elections in Madagascar, having to resort to traditional media, so using radio, using newspaper, using non-online medias to actually try and influence people's opinion on certain issues and potentially their vote for a specific actor. So it's not just simply looking at the social media campaigns or the work of social media companies to try and limit those campaigns. When we're talking about the African continent, we also have to be monitoring traditional media platforms. And lastly, the other thing that we wanted to draw out from our article was the specific risks to business. So whenever we're talking about influence operations, we tend to think of geopolitics. We tend to think of big political actors playing out against one another in a social media scene. But we also have to remember that there are companies that are operating in these contexts and who can often get caught up in some of these issues. So for us, what our key message is, first of all, to understand what are the sort of narratives that are occurring in a business's area of operations. So being a little bit more nuanced and trying to interrogate why specific companies have been targeted. If we look at the Kenyan elections in 2017, for example, some of the information or influence operations were going after specific companies that were allied to specific political parties. So you find private operators are finding themselves caught up in a wider political narratives and becoming the target of specific operations, not necessarily for their own doing, but because of the context they're operating in. The second thing to note is that while geopolitical considerations will continue to be hugely of influence elsewhere in the continent, elsewhere in the world, Africa is becoming, as we say in our article, a battlefield in its own right. We've got several different big geopolitical actors who are funding infrastructure investments, who are funding various projects across the continent. And they're coming in, unfortunately, close proximity to one another on the African continent. So for private companies either involved in some of these big projects that are sponsored or funded by bigger geopolitical powers, they could find themselves caught up in some of these targeted operations, which, as I mentioned, have really not much to do with the companies themselves, but have to do with the context they're operating in, or even wider geopolitical issues. And so with that, I will wind up on the influence operations piece and bring us back to talking about COVID, but this time from an economic perspective. So Jacques, over to you now.
Thanks, Patricia. Yes, I would like to start the economics discussion on with just a brief overview of the economic momentum that a lot of countries had coming into 2020. And this is very important to understand both the variation in the impact of COVID-19, but also in the variation that we expect to see in the recovery periods. So at the one end of the spectrum, we've got the East Africa region that recorded a regional growth rate of nearly 7% last year. That's not on a GDP weighted basis. Countries like Ethiopia and Rwanda recorded growth of over 8% last year, and Kenya just over 5%. And then on the west of the continent, we saw countries like Cote d'Ivoire and Ghana growing by nearly 7% last year. Now, at the other end of the spectrum, we've got Southern Africa that saw a largely stagnant economy in 2019 with growth of just 0.1%. Angola recorded the fourth consecutive annual GDP decline last year. South Africa grew by just 0.2% and actually entered a technical recession in 2019 H2. Now, this momentum is important because just looking from a business perspective, if you've got a healthy balance sheet, you're going to be a lot more resilient to take the knock of COVID. Say if you haven't got revenue coming in for a few weeks or perhaps even a month, you'll be able to survive that. If you had some expansions plans, you can perhaps just delay those plans, but it's going to be a tough year for you, but you're going to survive. On the other hand, if you were struggling last year and now you come into this year and take a few months, no revenue coming in, that a lot of those companies aren't going to survive. And this, of course, then also has some employment implications. If you're a healthy company going through a rough patch, you're not going to revert to job cuts that quickly, whereas a struggling company is going to have to implement some job cuts, and that has spillover implications to the rest of the economy. And then also the nature of this growth matters. And by this, I mean the evolving economic structures that we see. For instance, in East Africa, countries like Rwanda and Kenya have seen their strong growth largely driven by the expansion of services. And by this, I mean more traditional services like just the expansion of financial services to unbanked people, or expansion of telecoms to increase the mobile and internet penetration rates. And then also the formalization of retail, because as we all know, informal retail dominates in most African countries, and that formalization process is a large driver behind the growth in a lot of countries. Now, again, on the other side, we've got West and Southern Africa, where growth for many countries has been largely driven by commodity exports, and in some cases, consumption just stemming from oil or mining revenues. So the difference between these is if your growth model is more services based, you're going to be a lot more insulated from external developments, and growth is then driven by fundamentals. So when the crisis subsides, things are going to get back to normal a lot quicker, whereas growth driven by exports is a lot more prone to external shocks and tends to be very cyclical or volatile in line with commodity prices. So again, this not only determines the magnitude of the economic slump this year, but it also feeds into the pace of the recovery over the medium term. So another factor to consider when looking at the economic collapse this year is the various approaches that governments have taken in containing the virus. So we've seen quite a lot of variation in this. Some countries implemented very early and strict lockdowns, which will have a more severe short-term economic impact, but would of course then help on or benefit the health response. Whereas other countries implemented a bit looser lockdowns and also a bit later. But this could result in them having to extend lockdowns as the virus takes hold again, and of course the risk of a resurgence in infections. So yeah, of course, each country has its own idiosyncrasies that we have to take into account when formulating a forecast. So this is then the impact of the policy approach to growth this year, but then also what this means for the economic outlook for that specific country. So then just the final factor I would look at that will have a significant impact on both the magnitude of the slump this year and then the pace of recovery is the role of government support. And here we see it captured by our fiscal space scores. So just in general, fiscal stimulus will be able to cushion the blow of the pandemic in numerous channels. This includes providing greater social spending in the form of either grants or employment support, or initiatives to subsidize lending to the bank from the banking sector to the private sector, or delays in tax collection, or in some cases, we've also seen tax cuts to support spending. So just some background on the fiscal space scores we see here. These figures take into account each country's current debt levels and pre-crisis budget balances. We also looked at financial sector development, and this is in order to gauge the extent to which a government can finance its deficits by issuing debt instruments. We also looked at external liquidity and whether a country was already in debt distress pre-COVID-19 coming into this year. So essentially, a country with a high fiscal space score would be able to run a large deficit without excessive risk, while those with weaker scores will be more reliant on foreign aid to boost the fiscal stimulus this year. So just as an example, South Africa's relatively good performance here could raise some eyebrows. But again, this refers to the ability to increase spending to cushion the impact of the pandemic. But in many cases, we're going to need to see significant fiscal consolidation in coming years to ensure fiscal sustainability. So the idea is not that the score shows that these countries can increase spending a lot without any repercussions. This just means that those economic structures or the level of development of those financial markets will allow for increased spending this year to cushion the impact. So for instance, we see South Africa's GDP per capita is expected to reach 2019 levels only around 2024, as we expect to see some forced belt tightening by the government in coming years. And in fact, we believe the coronavirus pandemic has the potential to leave a much longer fiscal legacy in South Africa than that of the foregone economic growth due to it. So again, just when taking a broader view and taking all these factors into consideration, so that's now taking into consideration the economic momentum coming into 2020, the nature of that growth, the various policy approaches that we've seen being taken to contain the virus, and then the fiscal space to support the economy this year and going forward. This is why we see such considerable variation in performances this year and going forward. So that's the size of the slump and the recovery periods. So at the end of the day, countries like Mauritius, Morocco, Egypt, and Botswana are expected to take a significant loss this year, but they are also expected to show relatively strong recoveries over the next 2 to 3 years. while at the other end of the spectrum, countries like Angola and Zambia could take up to a decade to bring their GDP back to 2019 levels. That's it from me. Jasmina, can I please hand over to you for the questions?
Yes, thank you so much for this exciting presentation. Dear panelists, now our panelists will be glad to answer all of your questions. If you just join us, please do keep sending those questions. And please don't forget to mention your name and your publication so our panelists can answer your questions. We now have a question for Jack from Mr. Edwin Herrier from Omega News. The closure of the borders all across African countries in order to stop the spread of the pandemic have dealt a hard blow to import and export and trade in general, which have also led to loss of job in income for many Africans. Just how much of this negative impact has been for Africans and African economies? And where do you see the continent 1 year from now, economically speaking?
Yes, the lack of trade is always going to have quite a broad-based impact. But again, one of the points that I tried to make in the presentation is that growth is driven by different sources in a lot of these countries. So if your growth model is currently, of course, based on more domestic consumption, like we see in countries like Kenya or Rwanda, then that lack of trade, it's going to have a negative impact on the economy, but there's still going to be growth there because the growth is still based on domestic consumption as opposed to companies exporting or bringing resources into the country to add value and then export, or even just being a lot more commodity dependent, like the countries that we see in Southern and West Africa. And because of this trade closures, they are expected to see much bigger economic knocks this year, and they can also take longer to get back to where they were. Just because of this, they're a lot more dependent on commodity prices. And, you know, if your domestic consumption is to a large extent based on commodity prices or exports, that weakness is going to filter through into the rest of the economy. So the commodity dependence is not just all about external balances. That's also going to have a significant impact on overall demand in the economy. And that's also, of course, going to factor into economic activity this year and then going forward.
Thank you so much, Jack. Now we have another question for Bukola Bolarinwa from Control Risk. The question is still from Edwin Herrier from Omega News. How has COVID-19 promoted e-commerce in Africa?
Thank you. That's a great question. I mean, it's been really great for e-commerce. So what we've seen is traditional e-commerce websites. They've had a significant more traction. During the COVID times, people were even afraid to go to shops to go get their groceries. And so they were moving online to get their most basic supplies. But what's even been more interesting is that a lot of organizations who have not played in the e-commerce space at all, so we're talking some of the big retail spaces that have been very used to getting people through the door to buy things, have had to think about ways for them to move online. So that's either through taking orders from WhatsApp or social media such as Instagram, Twitter, and things like that, or building brand new e-commerce websites to be able to take orders. We've even seen hotels, because they've not been able to get in their usual sources of revenue, go online to be able to order things from their menu and things like that. And so it's been really great for e-commerce. I think that for coming sort of months and years, a lot of people have realized that not having an e-commerce channel for their goods and services is going to do them a disadvantage. And so they will see a lot more growth within that sector.
Thank you so much, Bukola. Now we have another question for Jack Nell from NKC Economics from Victor Muturi. There are funding being given by donors to boost business in many countries in Africa. By your observation, are those funds going to help the sector, the business sector, really?
Well, I think it's safe to say that at the moment, most African countries are going to need all the help they can get. And I think a big part of the idea of that funding is so that the governments of that country can channel that through the economy to the general population. So it's almost a safety net to protect the general population in that country through external funding. And I think through that process, by just supporting the economy in general, or trying to put a floor of how deep the slump is going to be, it's going to help the country that, does receive the funding. Whether it's enough, that's a different question, because in most cases, it won't be enough to prevent a big economic slump. And, there's also going to be fundamentals that are going to keep those economies dependent on foreign aid. And in some cases, this could be a wake-up call. But that being said, we've seen many false dawns where people think that this shock or these developments are going to force the government to implement some business-friendly reforms. And most of the time, we've been disappointed, actually. So the foreign aid, the idea is to channel that via the government to the general population. And in doing so, first of all, just minimizing the social costs, but then also just ensuring that the economy doesn't lose too much output, that it's going to struggle to get back to where it should be again. So the foreign aid is necessary, but it's not enough.
Thank you, Jack. I have another question for you from Dumiso Milo from Zinoa News. Just to zero in on South Africa, what do you think a country needs to do to recover fast from the pandemic?
This is a very difficult question. I am South African, so this is a question I've been grappling with for over a decade. And I think at the end of the day, it's a lot about confidence, business confidence. We saw business and consumer confidence dropping to all-time lows in the first quarter of this year. So that's even before the pandemic hit. And of course, as you can imagine, it's just gone south since then. And a large part of this is that there's a lot of uncertainty regarding the government's economic plan. That was the case before COVID-19, and even now more. There's a lot of uncertainty regarding the recovery plan and then just the government's policy or economic policy approach going forward. So we've seen the business community itself put forward some plans. The government itself has also put forward some plans. There's a lot of difference between those plans, but there's also a lot of similarities. But I think what the business community at the moment is really looking for is security and the surety what the government plans to do on important things like the energy situation, with the country still enjoying power cuts almost on a weekly basis now. If the government's going to open the energy sector to private investment to supplement power generated by Eskom, the state-owned utility, and then security on other factors from an economic policy perspective, like land. There was a lot of talk about expropriation without compensation. That's kind of died down now, but investors are going to want certainty there before they invest. As I mentioned, the government is facing quite a severe fiscal situation at the moment. So there's also a lot of uncertainty. How is the government going to finance that additional spending and then invest to get the economy going again? What role is the private sector going to play in that infrastructure-led growth recovery? So I think at the moment, all the government can do, and what's really important for the government to do, is bring some surety to the private sector of what the game plan is to get the economy going again.
Thank you very much, Jack. I have another question for Vincent Rouget. Several African countries will be having major elections this year, including Ghana, Cote d'Ivoire, Tanzania, and Burkina Faso. How has the pandemic affected the conduct of elections across the continent?
Thank you. Well, so the pandemic itself hasn't necessarily had that much of an impact on electoral timeframes. The main country affected has been Ethiopia, which was due to hold elections in August, and those have been postponed. But other than Ethiopia, all of them are proceeding with elections on time. And it is true that we have a particularly busy end of the year in terms of elections in particular in West Africa, where we've got 7 elections coming up in the last quarter of 2020. By and large, what the COVID pandemic has done is bring a little bit more tensions into some of those. There are countries where restrictions on gatherings have been used to discourage opposition from assembling and campaigning. But I think, in many cases, actually, the tensions around those elections were predating the pandemic. And what COVID has done is perhaps add more of the kind of social grievances and discontent towards the ruling camp that is contributing to unrest around the election, but doesn't necessarily change the game plan. We still see incumbents in most of these countries as the clear favorites to win re-election. And so we don't necessarily see COVID, prompting a kind of a landslide opposition victory. On the other hand, it's clear that most of those will be pretty competitive, and they're likely to be also quite turbulent. We're flagging in particular Côte d'Ivoire and Guinea as the two elections this year that we're most concerned in for political and social instability.
Thank you very much, Vincent, for these insights. I have another question for Bukola, still around e-commerce, but from another angle. How do you see the recent e-commerce growth and its contribution towards bringing African consumers and suppliers together? This question is from Judith, based in Ethiopia.
Thank you. That's a really great one, because what it's really done, the growth of e-commerce in Africa especially, has really brought together suppliers and consumers while cutting out the middleman. So this has always been a problem, and has been part of the reason why retail goods across a number of African countries are very expensive. So from where they're produced, usually in China or in the Far East, before it gets to the final consumer's hands, it's gone through 5-6 different people. But what e-commerce has done now is that it's been able to reduce the number of people between interactions. So a good example of that is the PPE example I gave earlier with the African Union, which has allowed countries to order directly from manufacturers the kind of gloves, masks, and things like that that they need directly from producers and manufacturers on a bulk scale. And as you know, when you're ordering in bulk and with those kinds of materials, the cost becomes significantly lower. And so the growth of e-commerce will continue to be able to link directly consumers and purchasers while reducing the middleman, which is significantly better for the consumer.
Thank you, Bukola. We have another question from Victor Muturi from Pamoja in Kenya. Patricia, there are fundings being given by donors to boost business in many countries in Africa. By your observations, are those funds going to help the business sector?
Thank you. I think Jacques has in part already answered that question. But just to maybe highlight some potential considerations in the East African context. Whether or not the funds are going to help businesses depends on exactly what programs are in place from the government side of things. If the government is in a position to directly support businesses, that is obviously the best option for businesses. But unlike places, for example, the US and the UK, where governments are directly able to, for example, pay the salaries of employees or provide financial support to businesses, that's not necessarily the case in the African context for a whole host of reasons, which Jacques had mentioned in his presentation. And that's largely to do with the availability of African government finances or African governments to finance such programs. So yes, they might help businesses, but it does really depend on what programs there are in place. Where perhaps we might see more impact is where governments are able to channel funding towards their banking systems or their financial services systems. So this is an indirect way of boosting local businesses because it avails more financing in banks or in other lending institutions to allow private businesses to access those funds and then continue with their operations. So there is that indirect way where funds from multilateral donors, for example, can be used to boost local businesses. But yes, it does really depend on the country in question and essentially what finances and programs that the different governments have in place to support that.
Thank you very much, Patricia. I have another question for Bukola. from Edwin, since your response. It says, thanks for your response. So how has banks and fintech company in Africa been able to improve on security in e-commerce? And would you agree that security and safety of hard-earned funds is always a concern for many Africans? Some foreign fintech companies don't allow for transactions in Africa due to fraud cases. And it thinks that security and protection against hacking will help many Africans to trust e-commerce and take full advantage of commerce in Africa. Shed light.
Sorry, I didn't catch the end of your question, Yasmina, but I think that the crux of the matter is around security, around payment platforms and online and using transactions online. It's a significant challenge, especially for people in African countries who want to purchase goods, for example, on more popular websites. I was just talking to a friend the other day, and her card was blocked because she used it in Nigeria. And so those challenges around security will remain a concern. Additionally, there's security around online platforms that exist in Nigeria. So just about 2 weeks ago, there was a Nigerian startup company that was hacked and some money was transferred out of it. And that really reduced confidence in that particular platform. And it will continue to be a significant challenge for people who are even going into trading, for example, trading currency. There's growth of cryptocurrency as well. The security of those platforms would be a challenge, but it's not just for, this one is not just for the new startups and the fintechs. Even for traditional banks in Nigeria, the amount of money that's spent by traditional banks on the security of their internet banking platforms is probably second to none, just because the amount of various types of fraud that's being attempted to be committed on those platforms is significant. And if any of those platforms are penetrated, it immediately loses confidence in people's ability to store and transfer money and all that. And if we're going to continue to promote fintech and promote digital platforms as the future, that consumers have to be assured that it is, if not safer, but at least as safe as having cash in your hand, which you can protect. And so that's going to continue to be a challenge, because the criminal actors will continue to try and find new and innovative ways to penetrate these platforms.
Thank you very much, Bukola. And thank you, dear all panelists, for these exciting presentations. I would like now to close the sessions. I would like again to thank all our journalists to have joined us today. And please don't hesitate to get in contact with us if you need more information on this presentation and would like more details on the report. Thank you again.